Can you give Lloyd a message? Cheers, thank you. Are we on, Sam?
Yeah, shall I record again now?
Yeah, I'll do it. Hi, everyone, and welcome for the market update for today, the Sunday, the 12th of June, 2022. Who would have known we started this in around 2012, 2013, that we would still be doing one of these every week going forward. Exciting night tonight. We've got some of the senior traders from Actions to Wealth coming in to help us with market laying ahead this week. We're going to start off with Ash, who's going to do some market data. Then we'll go to Alexis for fundamentals, and then we'll go to Lloyd for what is currently the strongest currency at this point. Ash, how's the data look? What should we be watching this week?
Oh, do you know, mate, you say the word exciting. I don't think I've been quite as excited about sharing the data as I am today. And really, it's off the back of last week. Last week was a brilliant week because we were looking at Friday. You know, Friday was a big day because Friday was the CPI numbers out of the United States, and that just affects everything. You know, everything that we were looking at. The equity started to move lower. The dollar starts to bounce, and we start to see the product that I'm going to talk about today, which is gold. Now, the reason I think gold is so fascinating right now is because we've seen gold struggle to reach some highs. Now, I'm going to share the screen of just the chart just right now, and then we're going to get to the data and see if the data sort of really backs up the idea here. So what we've got right now is let me just do that. Thank you, Gary. The heat map works well. That's fantastic, mate. So look, this is really important. I think this is a key thing that happened. What we've seen with gold is it unable to get any kind of traction. Now, considering what we've got going on in the world and the arguments for owning gold, gold should have been flying. It should have been flying a long, long time ago. We've had the conflict in Ukraine. We've got this inflation narrative kind of coming out. But why didn't gold start to move higher? Well, one of the main reasons is because the bond yields were choking gold. As the bond yields started to move higher, nobody was really sort of interested in gold. And the other thing was, when people started to sell everything that was risk on, they had to get they had to kind of rebalance portfolio. So they'd also sell gold alongside of it. But what we saw on Friday was a fundamental shift in the narrative, because gold actually put in this bar. This is Friday's bar. This is Friday's bar from gold. This is Friday's bar from the NASDAQ. Two completely different things were going on. You see here, gold NASDAQ moving to the downside, gold moving to the downside, So people were taking profit when they were selling the NASDAQ. They were also kind of like getting out of their positions of gold. NASDAQs, S&P, anything that you choose to mention. But this is a very, very significant bar. Now, it's not only a significant bar of the way it looks. We know what type of bar it is. You can call it what you want: engulfing, decisive close. A bar which is kind of like managed to swing from the lower end, take out the stops, and then get back to the highs. It has got a very, very distinct anatomy, this particular bar. But the most significant thing is that it was off the back of those CPI numbers. Those CPI numbers should have driven those bond yields higher, which they did for a period. But look what it ended up doing to gold. So we've got a very significant bar off a very significant number. And that would send a very strong message that gold is now a buy. So now what we want to do is flip to the data. Does the data back this up? Now, when we go over to the data, the fundamentals, I'm sure somebody will deal with gold, but the fundamentals are good for gold as well. But look at the data. Let's start with the seasonal pattern here. A low tends to come in on the gold price around about mid-June. This is June, this is July. Around about mid-June, we see this low put in, and then we see this sweeping move, a long, long move to the upside, right the way through to around about mid-October. So second week in June, perfect. Monday, tomorrow, basically is the start of that particular period. We're on the 13th tomorrow. So this would coincide beautifully with the bottom that tends to be put in, and then the sweeping move to the upside. Does the COT data back that up? Well, we can look at it in a simple level and look over here. 95%, 93%, 100% on the 36, the 18, and the 6-month, respectively, index. Now, the closer it is to 100%, that is basically telling us that the index is in the buy zone. So very close to 100% on the 36, very close on the 18, and right on the money on the 6. And if we look down at the actual index on the visual, look at it, right the way up the top. Now, the last time that we saw this was all the way back in 2019. Look at this. Well, 2018, sorry, 2018, it was right up here. And look at the rally that came off the back of it. So really excited about gold this week, mate. I think that there's very, very little in the way of arguing against it, which is fantastic. You know, this is the kind of thing we want to see. The fact that it was off the back of those CPI numbers just adds some more fuel to the fire. So gold for a long next week. I don't think there's anything quite as clear as that from what I've seen.
Mate, really love it. Looking forward to getting to the market. It has been, I think now maybe 15, 18 months since we've seen a really decisive picture on gold. And if you think that the data is giving us a really decisive picture on gold, that is big news. I'll be watching with that. Always when you've got a really decisive picture, that doesn't mean we go on Monday morning, we buy gold. We're still going to look for good price. We're going to look for good opportunity. We're going to look for the right timing. But we are going to be looking at gold this week to see if we can find those moments to get into this market and potentially follow a similar type rally. That rally you're talking about lasted nearly a year, nearly 2 years. So
yeah. 2018, really, 2018 to 2000. Yeah, you're absolutely right. Yeah.
No need to rush, right? Just take our moment, pick our times, and perhaps if we can build a position here over time, if the data continues to support it. What will be really interesting for me right now, and thank you very much for that, Ash, is we've got Alexis coming in talking fundamentals. Fundamentally, what's going on, Alexis? Again, I think it's always, right now, it's an exciting time for fundamentalists because there's actually stuff going on. It's actually fun to be a fundamentalist at the moment. What do you got for us this week?
Hi, Paul. Yeah, great stuff, Ash. Really love the gold stuff. And I think I'm on the same, very similar tone. Ash mentioned bonds, that's causing the movement in gold. And just nice for this week, I prepared a couple of bond comparisons to share with for those of you who are interested in the bond markets and how it will kind of affect currency. So I've got here the two chart comparisons. So as you guys know, just for those who are very new to this, the bond prices and bond yields are always inversely correlated. So I have here an example. Let's just follow the easy one first. We'll do the US. So I'm going to have US 10-year. This is a US 10-year bond yield, but together with the US 10-year bond price, right? So we have the US 10-year bond. Hang on, let me just swap it around. This is the US 10-year bond yield, and this is the US 10-year bond price. So if you kind of look at it, I think there's some kind of data missing at this spot here. You can see that the bond prices and the bond yields are inversely related. All right, and what it comes to show is as the interest rates start to go up in the various economies, in the various countries, what that happens also is the potential yield of bonds start going up as well. So it means at some point, if you buy a bond now, 10 years later, 5 years later, depending on what you buy, you will get a guaranteed coupon rate of a certain percentage interest. So bonds start to get attractive again in portfolios when yields start to get higher, when interest rates start to get higher, because it's good. It's a good way to build pension funds or stability funds, stable funds, right? We always talk about why do we have bonds in our so-called financial portfolio? It's for stability. It's because it's a government asset. You're not going to get a default, etc., etc. So bonds start again to become interesting because the yields are getting higher, which means the prices are getting cheaper. All right. So I'm talking about long-term investment, not trading. Of course, if you're talking about trading, meaning buying and selling the bonds based on the price movement, that's a different story. But we're talking about long-term investment, 5-year, 10-year, the pension funds, the hedge funds who work for these pension funds, they have to start planning their portfolio so that they will be able to pay out pensions, etc. Which governments do they want to start buying the bonds from to receive that stable income, the stable interest rate, the stable yield in that sense, right? So it starts to get really interesting because with the increase in bond yields, bond prices have dropped as well to make up for the differential. So here is the US. You can see the bond yield for a 10-year is up to 3.15%. It's like almost a double top happening. It's peaking over here. All right, we have Australia. So this is the Australia 10-year bond and Australia 10-year yield at the bottom. You can see the inverse correlation. All right, also you can see the Australia bond yields have broken above the so-called previous peak here, 3.5-ish, now it's 3.7%. Bond prices have come down as well. All right, let's look at Japan. Japan is something that everyone's looking at this current couple of weeks. We have Japan 10-year bond prices and Japan 10-year yields, right? This is Japan. All right. So the interesting thing is because Japan is a risk-off currency, people buy the Japanese bonds. Is it's very being risk-off. It means they find the government pretty stable-ish. But what is interesting is the way the bond prices move is starting to get interesting. You can see that although Japan has a 0% rate interest for the past many years, you can see that the prices are also kind of not moving anywhere. All right. And if we compare it to the US market, right, everybody's trading the dollar yen because of the interest rate differential, right, the interest rate difference. You can see that there's something happening around here. A squeeze is kind of happening. And the question is whether or not the dollar yen will continue to increase, right, because the dollar yen has been going up for ages and ages. So news have been coming out from the Japanese yen side. They have been, I think people are starting to get worried now about the weakness of the Japanese currency. So Kuroda has already come out a statement on June 8th saying that he's apologized for his statement and they are actually quite concerned. The Japanese yen is now a 24-year low against the US dollar, and there are some predictions. There are some predictions that the yen could go to as high as 150 to the dollar, but now it's almost 140. So I'm thinking that usually analysts like this, they kind of overshoot. They say 150, but actually, before it reaches 150, it might just turn around. So I'm going to be very careful when I'm trying to still short the yen. All right, I think the yen has been shorted quite its extremes. It might have a little bit more leeway to go, but I don't know how long more it has to go. And you can see that appearing in the bond yields as well. There is a slight push up to the bond yields. I think something's happening. It's almost at the top over here. So I don't think the yen will weaken very, very much further. One thing is the technical caution that is already at its extremes, but I think the yields are reacting as well. You can see bond prices, they've come all the way down to lows as well. So I think if bond prices start to break below this level of bond yields, and for that to happen, the bond yields has to change. I think this is like a point of change. There is an indication that something's brewing in the governments, right? But we just don't quite know where they're going at. So the whispers of the rumors are starting to come out, right? The Japanese, I think last week, the Japanese commercials are worried about the weaker yen. And then later on now, they're talking about the consumers, the consumption side of the market are now worried about the weakness of the Japanese yen. So I think with the pressure from the commercial side and from the general sentiment of the worry of this weak yen, I think governments are going to come out and make some kind of statement. We just don't know what that is. And with that statement, if the Japanese is still going to hold on to, I would love a weaker yen policy, we might see a bit more shoot in that weak yen. But with all the worries coming in, we might just have a flat line over here and the consolidation happening. Maybe the yen might go sideways for a little while. So it might be probably beneficial for the range traders, not so beneficial for the trend traders. So we are looking at almost the end of a trend, not quite sure yet. So I would say trade the yen with a bit of caution because the bond prices are looking something strange is happening over here. So this is this will be interesting to check out. And I will be very attentive to news coming out from the Bank of Japan for the next couple of weeks. All right, something's happening over there. On the other end of the spectrum, a quick one. I think everybody knows the euro is starting to move because very simply, European Central Bank confirms July rate hike plans. All right, so I think the plan to increase interest rates are more or less confirmed. The yen, the euro has already started to react to it. A bit of strength is coming back into the euro. So little quick peek, since we're on the topic of bonds, this is the 10-year euro bond price. And this is the 10-year euro bond yields, all right? And the market has reacted already, all right? The bond yields has already popped up to 1.5%. So I think pretty much is a precursor, pretty much guaranteed they will kind of announce something a bit more firm sooner or later. So I think July is already going to be starting to, the euro strength is starting to price in already. So I think for the next medium term at least, a bit more strength will be coming back into the euro. Right? It seems that they are finally making a move. So I think the euro will be an interesting currency to trade in the next couple of weeks. That's all for me.
Cheers for that, Lexi. Interesting to watch the euro and the yen during the week as these things roll along and start to play out. Next, we're going to have a look as we speak about the strength and weakness of different currency pairs. We're going to have a talk to Lloyd about what is the strongest currency pair at the moment and what is the weakest currency pair at the moment. Lloyd, what have you got?
Hi, afternoon everyone. So let's have a look at the charts. Alright, so just have a look at the 2 weeks before our pairs that we have traded. Aussie yen actually went very well. I think I traded this test bar. It has since went further off than that. And the next was actually dollar CAD, which I traded. I got stop loss once for this bearish engulfing bar. Re-entered with this again test bar and got my 3-to-1. Yeah, so this was a much more finicky trades to go in. Now, I'm saying that for this week, well, it's actually rather obvious to me because if you look at the dollar index, it has just broken a very, very nice level. Yeah, let's blow it up on the weekly chart. You can see that it has a retracement to this very strong uptrend, and we are just going forth upwards again. Yeah, so this is a very, very decisive close. As such, the dollar index, I'll rank it the highest for this week, and the rest is actually a race to the weakest. See which one is actually more weaker than the other comparatively, and which one is going to hit a horizontal level soon. So I'm saying that now the Canadian index against last week, very nice bounce off this $80 level, and it's fast reaching the bottom of the range. Now I think the hourly traders or even the lower time frame traders can still jump in on Monday, Tuesday before it hits this horizontal level before it bounces again. Other than that, I'm going to rank it the second strongest simply because that the tendency for it to bounce off this level is pretty high. Now have a look at the Australian index, still continuing on its downward momentum. Again, it's reaching near a strong horizontal level at $70. As such, I'm not very keen to trade the Australian index. Just going to adopt a wait and see approach to see whether it's going to bounce off or break this level. Swiss index, pretty similar stories to the Aussie index. Again, after a very, very bearish movement downwards, retracements, now it's hitting the $100 level again. We have very, very small space to play about. As such, same as the Aussie index, wait and see approach whether it's going to bounce or break. That will determine whether I can actually enter. Now the Euro index, I think for the 4-hour time frame, we do have much better leeway. It's about halfway through to this horizontal level. Again, in the past, you can see that this level actually holds pretty well. Yeah, as such, I'm not very keen to actually trade through this level unless the price action has indicated so. Yeah, but I'm saying that if you're in a position or if in the 1-hour time frame we do Monday or Tuesday give us some retracement to the downside, we still can aim for an easy 2:1 or 3:1 before I hit this level. Yeah, but for the higher time frame, I'll rather stay out of it. Now, next comes the interesting part, Kiwi. Very nice bounce off this level, break and retest. It got a lot of leeway before it hits the $60 level. So let's actually jump in for the ride if we have opportunity to do so. Pound index, again, huge leeway to actually trade to the downside. Even then, I'm not sure of this 120 level because it does have a strong break in the past. It might come again, but I'm just pointing out that at 120, it did. You can see that price did fluctuate at this level in the past. Yeah, so can trade, it's tradable, definitely tradable, but do it with a pinch of caution. And the last is yen. Again, I don't see any strong horizontal levels. In fact, I don't see any horizontal level about. It's an uncharted territory. So let's jump in the fund while it still lasts. Yeah, so as such for this week, yen is going to be my weakest pair, followed by pound and then kiwi. So we can actually trade the strongest against the weakest dollar yen. You can see that on a 4-hour chart, we do have consolidation. I'm just simply waiting for a break and retest, and I'm going to jump in and to long this pair. And the other pair that I'm going to trade it is actually pound cat. I can extend this horizontal level. You can see that price bounced about this level in the past. So again, same play, break and retest, and then I'll be shorting it. My color is wrong, should be red. Yeah. So keep a lookout for dollar yen and pound cat. Should be interesting play coming up. That's all for me, Paul.
Cheers, Lloyd. Thank you very much for that. So we've got pound CAD short, dollar yen long, looking for break and retest of level. And I really want to point that out for all of the analysis we've done today. It's not just about looking at some analysis, taking a trade. It's about looking at analysis and finding the right entry, finding the right opportunity, the right place in the market, take advantage of it. Look, it's a great time to trade. There's lots going on in these markets, and it's well worth being involved in them. But it really takes patience to find the best trades and make the most money. It's always the same story. It never changes. Look, we'll be back next Sunday with another 2 or 3 traders from the Senior Traders for Excellence 12, having a look at the markets for today for Ash on data, Alexis on fundamentals, and for Lloyd's on currency strength matrix. Thank you very much for joining us, and for all of you that have joined us in the room, plus on YouTube, Facebook, Twitter. Thank you for joining us as well. We'll see you back next week. Thanks, everyone. See ya.